We've, made 15 plus investments in the last 2 years.
If we really want to be a sizable outcome, it can't just be the companies building. There have to be adopters as well, right?
If you're doing a classic software or if you're doing RPA, you are not going to find buyers today.
But we will see a lot more agents coming in, no matter what vertical you're thinking about. Especially for India, I think voice is going to be the primary format of having conversation with AI. We've made one investment in, an AI companion for the Bharat audience.
There is greater efficiency than ever before, but at the same time, companies are raising more money than ever before. Earlier, if you had PMF, you had it for 5 years, and now you have PMF for 5 weeks. The craft is very important because if the craft and the product is great, users will still stick to it. Getting that right requires magic.
Where is Elevation going to invest in 2025 in AI?
Don't worry, we'll be fine. And then, beach mein we'll stop it.
Anyway, when you guys talk, the focus is not on me.
The focus should not even be on us.
You're just staring at me.
You're actually looking down, so you probably need to look up.
Welcome to another episode of SummitUp by Elevation, a series where we dive deep into the emerging themes and opportunities in the startup ecosystem. Joining me here today is Krishna and Poorvi from our AI practice, who lead AI investments here at the fund. We last caught up about 5 months back in Feb, and so much has changed since then. And there's a lot to unpack in this episode, so we have an exciting episode coming up. And as for some context, we have made 15 plus investments in AI native companies over the last 24 months. The sheer number of deals we have been doing means we haven't had the time to sit and dissect and talk about these in detail. So glad to have found this window as we are in the same room here. The coordination also gets particularly tricky because we also operate, just like our founders, truly cross-border with teams here in India and the US. Glad to have you guys here and welcome to the pod.
Thank you.
Glad to be here.
So I'd like to start with something a little controversial. Now, Poorvi, you just posted this last week to your LinkedIn that often you yourself advise founders to target global markets first than, let's say, sell to Indian enterprises on day one. And there's been an outpouring of founders who relate to this particular sentiment, right? The perception of the AI founder today is that Indian buyers are frustratingly slow and are extremely price sensitive and price conscious. As a market, what are we lacking? Can you unpack your thoughts?
Yeah, sure. Yeah, see, the intention was to not create any controversy, but just, lay out what we are hearing. Like literally, I meet, 5 new AI founders every single day. And everyone starts with the same sentence when we ask that, who are your customers? And they, objectively qualify it like this, that, hey, I'm not selling in India. I'm going global from day one, and US specifically. Indian enterprises are not paying, they negotiate on price so much. And when we meet a lot of cross-border founders in the US as well, that's the first thing that they talk about. So it's a little frustrating at times. It stings a little bit because you're still in the country and you want this country to grow with you. So I think the sentiment there is that, hey, while there is no doubt about the talent, there are a lot of very interesting AI founders building global companies from day one. They don't want to sell in India. And unfortunately, the problem with that is that while there'll be a lot of builders, there'll be a lot of good AI companies that will come out of the country, built for the globe, the adoption patterns will still lag behind. And that's the part that I was pushing hard on, that, hey, if we really want to be a sizable outcome, it can't just be the companies building. There have to be adopters as well, right? That's how ecosystems grow. We can't say that, you're always negotiating on prices. You're always thinking about that, hey, we'll build it ourselves. We don't have the bandwidth today. And these are some of the things that we keep hearing from enterprises here. And our founders keep hearing. The sales cycles are very, very long. They have to, go around the hoop so much more. And if you look at the comments that, some of the LinkedIn comments that people have posted that, I've gone to these companies 5 times in a row in a month, and that's when there'll be like 20 people trying to make a decision. Things don't move like this, right? And it's frustrating for the founders, and that's why we also suggest them that, hey, go global from day one. That's where the market is. That's where you'll have to build your pull. I think the problem here is that, hey, we want the Indian enterprises and institutions to also step up to create this ecosystem. We want them to say that, hey, there's a new company, they're building something exciting, the product just pure play, use them on the merit of the product, give them a chance, and then I think they'll be able to uplift these institutions as well. So I'm not actually worried about founders not being able to build companies. I'm actually more worried about the ecosystem not getting uplifted, because we are actually, exporting the talent, exporting the ecosystem where, not here. They start to think about a company, an idea, a product, and then they move and they are able to actually pursue global clients to use them. Unlike what used to happen in SaaS 10, almost a decade before, people would still try to sell to Indian enterprises, have some leeway here and then move. But in AI, actually, people are moving way ahead. So that's been the problem that, hey, we as an ecosystem really need to step up.
Krishna, your views?
I think the way I would look at it is people are maybe sometimes in the beginning iterating in India, but they're only selling to global markets. India is a great market to iterate. The talent is amazing. People have connects at the right levels. So you can iterate faster, get feedback quickly. But like Poorvi said, willingness to pay is not there. On the build versus buy, it often is towards build instead of buy. So I think that holds us back and founders from getting that initial push, and they have to start selling to international markets on day one. While that is a great recipe, I think what will be great to see is Indian market is also starting to adapt, because I think that will really put this on, supercharge. The other part I would say though is I also often, interestingly enough, get requests in the Valley where people want to get introduced to potential customers in India. So that is a very interesting conundrum as well, because in certain categories, I think for instance, Indian BFSI has actually been an earlier adopter than, say, selling to large banks in the US, which will move a lot slower. So I do get those requests, and I've seen Indian companies listed on pitch decks in the Valley, which has been fascinating and incredible to see. But I think we just need to have a lot more of that as an ecosystem for us to be the next big destination.
No, absolutely makes sense. So Indian enterprises have to step up immediately with respect to adoption, and it's still going to be a win-win deal.
It's going to be a win-win, right? And see, at the end of the day, that build versus buy, for obvious reasons, exists. But the problem with AI is that things are moving so fast that by the time you hire those people, by the time you rechange your org, 6 months have passed, and some of those things never get built. And that's been the problem. Why don't you adopt something that's right out there, is a world-class product, and move on? I think that's the kind of mindset shift that we need to see a lot more.
Perfect. No, just, I have the perfect follow-up to this. So it seems that we have moved past from, build in India, sell to the world, to build for the world, but highly leveraging this US-India corridor. Now, again, we are a truly cross-border firm with full-fledged teams here in India and in the US and Bay Area. And just like, we are building cross-border just like our founders. Now, this symbiotic relation between these two geographies has only grown stronger, in my view, with AI. Give us a sense of how this corridor has evolved for you.
I think just the number of teams building cross-border has been incredible. The quality of those teams is world-class. We've seen several companies which have had, follow-ons from top-tier investors. Just goes to show the quality of talent and quality of companies coming out in the corridor. We've seen such world-class company coming out from India and in the corridor. And I think that's also one of the reasons why we've built a truly cross-border practice. Founders in this corridor are working late nights, early mornings, burning the candle on both ends. We're doing the same here. I think this helps us build real empathy with our founders too. And we want to support them as, the sun shines. We'll follow them around the sun and provide them support. So I think that's something which is very much ingrained in our DNA as a practice and as a fund as well, which is why I think we are also able to support our cross-border founders really well.
Yeah, we often like to joke this with our founders now that you got 24/7 support with us. When I'm sleeping, Krishna is there. When Krishna is sleeping, I'm there, because, that's how we are geographically placed.
Perfect. Let's now talk a little bit about our investments. We've been investing across the stack, from infra to dev tools to application and the services layer. Has there been any change in where we invest since we spoke last time?
Yeah, so more or less the thesis remains strong for us. I think as we had recapped in the last conversation when we all sat together, There are 4 areas where we are actively investing. One is middleware and dev tools. The second is applied AI on the application side, both across verticals as well as consumer. And the third is AI services. The good thing is that our conviction on all these 4 places have only strengthened, and we have made more investments across these places, right? Some of them have been announced, some of them have not been announced, and probably in the due course of time, we'll talk about them. But we have actively invested in AI services as well, because we do feel this is an active opportunity which will have a true India leverage. Still early days, but very excited about the themes that we are actively investing in.
The one thing that has changed since we last spoke is I think the pace of action has only increased. And, so has our pace of investing. Like you mentioned, we've, made 15 plus investments in the last 2 years. I think we've been very, very active. And also, I would say we are willing to work with founders from day one, as even when they're thinking about ideas. So I think if, this is a call to all founders building in AI, feel free to reach out to us at any point. Nothing is too early.
No, clearly, I think 5 months in AI feels like 5 years. I think
Yeah.
since we last met, I think ChatGPT has gone from 400 to 800 million users.
Exactly.
So that alone speaks for the speed, at least. So where is the action right now? What are you excited about these days?
Yeah, there's a lot of action. I think we spoke a little bit about this in the last conversation as well, but agents are truly coming of age now, right? And as a thesis area, we are very active on agents and the entire agentic stack, to be particular. So if we think about some of the investments, I spoke about Composio. Obviously, that's a platform to do application and tool calling to build agents. I spoke about Unify Apps, which is an entire enterprise-grade platform to build agents. I spoke about Maxim AI, which is an evaluation and monitoring platform for agents, and a lot more. I spoke about Adopt AI, which is a platform for agentifying B2B applications. There are some unannounced deals, but one is in the FRAML space, which is fraud, risk, and AML space, which is essentially automating the entire investigative workflows through agents. Then there is one in healthcare, which is essentially automating the entire GTM for medical reps. And there are a bunch more. So overall, in the entire agentic stack, we have been very active and we continue to remain very active. See, what has changed is now that the entire agent economy has come of age. Which we used to be more autocomplete, now is auto action. It's more like a co-pilot that no matter what you're doing, there is an agent that can do work for you. I still feel it's early days. I think every 6 months when you ask me, there's a lot more movement, but it still feels it's too super early. It feels like an intern right now. Most of these agents who are able to perform, let's say 3 on 5. So that's been the core focus area for us. But I think another thing that Krishna and I actively debate about is that, hey, how do we really think about these agentic companies, right? I think today the way agents are evolving, while it's able to perform action for you, but just the way they are built, right? It needs to be super personalized. It almost needs to be invisible, right? And the UX really is a differentiating factor. I think in SaaS, UX was more like a top layer, but here it's an invisible UX. And that's why we get very excited about the companies who are actually have that taste, who are actively thinking about differentiating that UX and creating that invisible fluid layer to build agents. I do feel there might be, and again, there's a joke that we keep hearing about, that in any meeting that we go, I think more than humans, we see agents today. Like even in our investor meetings, there's like an agent or a co-pilot for everyone. But we will see a lot more agents coming in, no matter what vertical you're thinking about.
And what I'll just add 2 more things. If we just look at the last 6 months, there's been such incredible technological unlock. 6 months ago, we could not talk about planning agents. Now with reasoning models, you're just seeing so many of them. Earlier, you had to build an agent workflow in a canvas, and now these agents are automatically able to figure out their workflow. The other big unlock has just been around using browsers and actually performing actions even in legacy websites. We've seen and backed actually several companies in that space, which has been very interesting to see, because now these agents can actually take action not have to worry about doing integrations with legacy systems. And then, of course, there's been also a big unlock on the voice side, where voice models have come a long way in the last 6 months. So I think when you just look at the amount of change that's been taking place, I think these agents are just going to get, 6 months or a year out, I think they will look very different. And I think that's the lens we need to use. The second thing I'll add is, this is not just, an exercise in us trying to identify stuff. Buyers are actively seeking that out. If you're doing, a classic software, or if you're doing RPA, you are not going to find buyers today. CIOs, automation teams, centers of excellence, they're all looking for more agentified workflows that actually do a lot more. Even in companies, there's a board level mandate to figure out, hey, how do you drive much greater productivity and efficiency? And we are seeing that impact on our companies, which are, on the right side of history. They're actually seeing amazing uptick.
Yeah, no, I just want to double click on this aspect of agents. Now, I've observed in many of our recent deals in agentic AI companies are heavily voice led. Now, is this a function of, like you said, just how voice models have improved a lot, or on the other side, where consumers are now keen to, just adopt voice-based interfaces?
So what I would say is, I think it's not just voice. I think software is increasingly becoming multimodal. And I think that, I want to be able to interact with the same thing through voice, through text, all the other means as well. And I use that in my daily life. When I'm driving to work in the morning, I actually talk to ChatGPT and ask it like, hey, tell me about this company or tell me about this area, and I'll have a voice conversation. And when I'm at my desk, I'm actually chatting with it. So I think users are realizing there is this whole pervasiveness to AI, and we'll start seeing a lot more of that in enterprise use cases as well.
I double tap on this one, right? Because I think voice AI is very close to me. I started my career early in the early days of Alexa, when we were building out voices for all the geographies that Alexa was present in. And I still remember, to even launch one voice, it used to take 6 to 8 months, because there'll be a voice artist, they'll come and record, there'll be an entire text that you'll have to think about, then there'll be prosody, pronunciations, emotions, and this was a heavy R&D work, right? From there to today, the way voices sound and the way they interact has completely changed just in the last 5 years. So there is I do feel like voice AI is one of the very, very huge unlocks of where AI is today. And that is why today you can truly have a 24/7, and as we call it, right, a 24/7 receptionist, a 24/7 customer support, a 24/7 somebody to actually help answer your queries. And that's a true unlock for enterprises. Even on the consumer side, right, I think we've started seeing, and we've made one investment in, an AI companion for the Bharat audience. But I don't think it's far from where we are today, where people start sharing their daily lives, where people are using AI for language learning, where people are using AI for companionship, where people are using AI for therapy. So there's a huge unlock on the consumer side as well for voice, because especially for India, I think voice is going to be the primary format of having conversation with AI. So I'm personally very, very excited about how most of these voice AI companies get shaped. And we were talking about YC the other day. I think more than 40-50% of YC companies in the last 3 batches have been voice AI companies.
No, superb. Now, on the consumer side, I'll agree, because I think for a lot of people around me, ChatGPT is their best friend. They talk to, chat as they call it.
We need
like
probably
humans.
more friends now.
Yeah. Makes sense. Now, moving to some company building aspects, a hallmark of AI startups has been building with lean teams. I recently read that a solo founder-owned vibe coding startup with just 8 employees got acquired for $80 million in cash. Now, Cursor, Midjourney, Lovable, these are all in multi-$100 million of ARR and are between 10 to 30 employees. So clearly, small teams can reach impressive scales. But how prevalent is this in our deal flow? And what is their potential to become venture backable? What's your view?
Yeah, I mean, this is one of the biggest conundrums of our time, because there is greater efficiency than ever before. But at the same time, companies are largely raising more money than ever before. Like, I think those two things don't entirely compile. So I think there's probably a little bit more nuance to it. The way I would say it is, I think small teams can hit way above their weight class, whether it is one person, five people, think that is up to question. The part though is, a lot of this is being seen in a lot of prosumer style activity, where a very small team, they don't need a sales team, there's pull in the market, there's automatic adoption that's happening, and they can actually get to a very decent revenue run rate or an ARR number if you have it. The challenge is that it also comes with a lot of churn. It also comes with the fact that you have to keep investing in customer acquisition costs. So in some of these situations, you almost have to think like a consumer company. And what that means is, at some point, either the leverage is coming through marketing, or the leverage is, by going into enterprise. How do you make this sticky? Just launching a product, it gets adoption, that's great. But to build a durable business, you need a moat, you need stickiness, you need the usual laws of physics that have to come back and play. And for that, I think founders have to think through those answers. Otherwise, the next competitor will launch and they will outbid them on Google Ads. And then how do you actually defend your turf now, right? So we definitely see a lot more efficiency given the pull in the market. I think it gives you that initial launch. But beyond that, I think companies do have to invest in, traditional company building. You need that talent to be able to either focus on growing into enterprises or figuring out, hey, how do I make my distribution extremely sticky? If you think of it, a consumer mindset.
I'll just add to, I think completely agree. I think the only thing I'll add there is you really need to know what game you're playing, right? And if you are a company which is going to be very bottom-up adoption first, which is where the Cursor, Lovable, Bolts of the world lie. See, DevTools is a very interesting category because developers are the buyer as well as the user in this case, and they can champion you internally and say that, hey, I love this product, my manager is going to buy it for me. And that's how a lot of these DevTools, so DevTools as a category, bottom-up completely works, it's beautiful. I think in a lot of other categories, which are very prosumer is the word we use for them, right? I think a lot of bottom-up adoption can come, but at some point in time, it can stall, right? We still, and I hope and I pray that some of these companies continue to grow the way they are growing because that's magical. But you really have to be cognizant of how the churn, retention, all of those numbers take shape. And to that point that, hey, which game you're playing? Because if you're truly playing an enterprise game, a very high ACV game, not a $20 or $30 per month plan, then, it is going to take time. And if any investor is saying that, hey, to an enterprise company, why are you not getting to a 10 million ARR in 1 month? I think that's not worth it, right? Because an enterprise company, you will have to go to the traditional loops of IT, security, and building those integrations, doing all of that jam, because that's the only way to sell to enterprise. And today in enterprises, you also need to be a little bit more consultative, right? Because you're actually getting very deep into their data, very deep into their systems. They are not just going to say that, hey, one of my whatever engineer, my business person or my product manager is going to use something and they will use everything in my data. That's not how it works. So an enterprise company will take time, and that's the kind of patience one needs to have, versus a prosumer company will grow faster. So I think that differentiation is very important to highlight.
I'll just add two examples to this, which are very telling. I was just talking to, a founder of one of the largest consumer tech companies in India, and he mentioned they went from one engineer adopting Cursor to the entire company adopting it in under 2 months. So obviously it goes to show the benefit of this bottoms-up adoption. But at the same time, that team Cursor had to come and sell top-down as well. It didn't happen all bottom-up. So at some point that conversation happened. The other part to, Poorvi's point, I was chatting with another founder, which is, a mid-scale enterprise company. And he mentioned, hey, even now when he goes to enterprise sales calls, half the discussions are either about sports or pets or gardening. I mean, that's still how you sell enterprise. You have to build relationship. You have to consult. I don't think any of that has changed. I think there are tactics that have emerged which are providing a tailwind today, but I don't think the motion is going to fundamentally change, and we'll come back to more stable state in a year or two.
No, agreed. I think small teams can get to a certain scale, but they will eventually hit some sort of a wall when selling into enterprises. But at the same time, now that anyone can start up with AI, if you have a great idea, the space is crowded. The joke is that everyone's building the same thing. Now you've looked at many successful AI startups. What's a key common feature among them?
So the thing I would say, and this is a couple of weeks ago in the Valley, we did an event where we had a very senior leader from Google who had come in, and we asked him this question: what do founders in AI need to have in abundance? And his answer was adaptability. Because everything is changing so rapidly. Earlier, if you had PMF, you had it for 5 years, and now you have PMF for 5 weeks, and something changes immediately. So models are changing so fast. You might be roadkill in front of a foundation model that improves significantly. I mean, if you've seen the last few weeks, OpenAI has gone in the turf of granola, in the turf of Whisper, and everybody's jumping into everything. Claude has launched its own coding agents. So at this time, I think the two things: one, that Poorvi pointed out, the craft is very important, because if the craft in the product is great, users will still stick to it. Getting that right requires magic. The second thing is adaptability. Things will happen. You'll have to pivot. You'll have to, change your distribution strategy. You'll have to change your product strategy. All of those things in a matter of weeks. But I think if founders are fundamentally strong at both product building, craft, as well as distributions, I think they can actually figure it out.
No, I agree. I think as users, we've been able to discern craft between products, substitutable products.
That's true. Yeah, I think very similar. I think it's one of those things. I think I was reading something on the AI startup demo day that happened at YC recently, and it's truly about survival at this point in time. I think it's very difficult for anybody to say, hey, this is going to be the company. Unless you're a very foundational or an infrastructure company, it's very difficult to say that, hey, this will be the company that will continue to dominate 10 years from now. So every year, every 6 months, you just keep on surviving and thriving, then surviving and then thriving, and then continue to achieve that PMF every 6 months, because things are changing as fast as they can. So adaptability and agility is the only thing as a founder that can keep you going and being on top of things.
Right. Now, the other side to survival is that high competition means founders need to get attention of each and every consumer. There's just so much. And that's what I'm noticing. Cluely is a great example. With viral marketing, and they're able to land enterprise clients, which for me, I found it surprising. Now, both consumer B2B startups are into this edgy marketing, to capture distribution. So what's driving this?
Yeah, it's almost funny, right? And again, we did this event with Clean recently, and he mentioned something that, it's funny that we've started thinking about ourselves as a consumer company. The way our daily KPIs, the way we are measuring our metrics is actually like a consumer company. What are our daily active users? What are our weekly active users? How is our product getting used, etc. Because revenue is a lagging indicator of your product today, right? Early on, yes, your revenue would actually, you will see people are using because it was seed-based licensing. It was, more SaaS-ish kind of contracts. People would pay upfront. But right now, only once the product has been used, there is some outcome people want to pay. So that is why a lot of these companies, and I think we spoke about it a little bit earlier, that marketing, fortunately and unfortunately, has become a very important factor, because everything seems the same. How do you break out? How do you capture attention and be in front of somebody who's looking out for you is very important, right? So marketing, and see, again, it really depends on what kind of category and product you're building. If you're prosumer, if you are bottom-up adoption, marketing has always remained front and center and continues to remain front and center. If you're enterprise sales, there's a lot of more seriousness that you need to have in the business in traditional sense, that you will have to have those salespeople, you will have to have those security standards, you need to be compliant, etc. And that's what sells. So I think just breaking the clutter and being that thought leader of what is possible has become super important, because people don't know today what's possible. So somebody who comes, a founder who comes and says that, hey, I know what's possible in this industry and this is how I'm going to solve it with AI, becomes super powerful in today's age.
And the other thing I would add is that you have, if you look at the marketing playbook for a lot of, companies that have really broken out, Composio being one of them, it's a lot more about show versus tell. I was at RSA a couple of months ago, and I remember walking through the expo floor, and the thing that struck me is all the big booths were saying the same thing. There is no differentiation amongst, and all the incumbents have jumped onto the AI messaging. And if you just wanted to break through the messaging in the traditional way, it is nearly impossible. So I think the upstarts are actually getting a lot more creative, a lot more wonkier, a lot more of show versus tell. I mean, just the number of you open up Twitter and the number of people showing what they have built, and that actually leads to a lot of adoption. I think we are seeing it because traditional enterprises have jumped to the same bandwagon. They have a lot more dollars to spend, and I think we will have to. I expect that over the next 2 years, this will actually continue. Breaking through the marketing noise is going to be far more critical.
With AI, I agree. A lot of these are completely new use cases, and marketing then becomes non-negotiable. So with low barriers to entry, the barriers for survival has only become much, much higher. How are you guys seeing this playing out?
So the way I look at it is, if you look at any super cycle, and we are in the AI super cycle, it's bigger than mobile, it's bigger than cloud. But if you look at any of these last cycles, that's exactly what happened. Early days, there was a lot of innovation, a lot of companies came about. It was hard to differentiate between different ones. And gradually, I think people figured out what the moat looks like in that business. There were probably 100 Uber clones, that I can go back and count in my head. No, none of them have survived. But when I remember when the cloud came out, for every category, there were several companies who were doing it. I think at the end of the day, you have to be able to differentiate yourself both through craft as well as distribution. The techniques of that will look different. For instance, we've talked about how distribution techniques today, are very different. The bar on craft is extremely high. That's what really drives adoption and stickiness. But my expectation is that over the next 2-3 years, things might start to settle down, and then you'll see a little bit more classic distribution and, a lot more consolidation at the lower end of the market as well. But I would totally expect to see this Cambrian explosion continue, because unlike last super cycles where, cloud was one big change, now with AI, every 6 months, there is like a significant improvement in capabilities and in models. So I think we're like one cycle after another, and that's all overlapping. So I think this is going to last a lot longer than previous cycles, is my sense. But
yeah, no, I also think, I think M&As have started to take shape already, which is very interesting in such an early cycle. Like a lot of young startups with technical brilliance, with UX differentiation, with very, very smart founding teams have already started to see, and acquisitions are happening, right? So if you think about a lot of bigger players, they want to get those, either the AI, AI native founders or AI native engineers, or actually buy them out for their product. Actually, I have it written because I was reading the PitchBook report just this morning, and probably I'll call out some of the interesting stuff that has happened. Just in Q1 of 2025, there are 550 M&A deals involving venture-backed startups, totaling about 71 billion in exit value. That is huge, right? Obviously, that includes your likes of Codium for 3 billion, for Scale for 14.3 billion, Johnny Ive startup for like 6 billion or so, and a lot of high-profile deals. But it's very interesting to see that, hey, how M&A is happening. And we've seen all the Scale AI, the Johnny Ive companies being super early, but people want to acquire them for the raw horsepower and the talent that company has. So I do see that this will continue to happen in the next few years as well.
Some consolidation has already started to happen.
Some consolidation, but in this cycle, even acqui-hires are running in billions of dollars. So I think it is definitely a massive super cycle.
Now, for both horizontal and vertical AI startups, how credible is the threat from the OpenAI and Googles of the world? It's getting increasingly difficult to build sustainable differentiation. What's your take on this?
Yeah, I think we've touched upon some of this before, but when I look at the very horizontal applied AI use cases, I think the true moat comes from both distribution as well as craft. I think if we look at products like, say, granola, I mean, others have launched the same thing, but I think Granola still has much higher craft, at least as of today. The same thing about Whisperflow. They just raised, a 30 million round of funding. You could actually do this with OpenAI, but I think just the next level of craft and detail, I think, is what matters. So I think that's what matters now. But over time, I think these products will also have to figure out how to do at scale distribution, because that will be a game. They have to think like a consumer company. They have to own the shelf in the retail store, so to say. And I think that's where they will also have to build a moat. When you look at vertical use cases, the moats are easier, but there's still threat from not incumbents in this case, but the horizontal platforms. Because in some cases earlier, capturing workflows in vertical scenarios was harder. But in today's time, you could say, hey, I just open up Cursor and build that workflow. Right? So the moat has to be not just in terms of workflows, but in terms of, maybe unique legacy integrations, in terms of data that you bring to the table, in terms of being able to drive real outcome. Maybe there's a little bit of, consulting also, bundled in. So I think all of those things will have to be added to build true moat. For vertical use cases. I think, going back to our third thesis area on services, I think that is where startups can actually disrupt. I think the legacy players, not sure how much of a moat they have, but I think they have reason to worry.
So my next question is on valuations. As you know, AI native startups are growing much faster than their traditional counterparts, and also in a much more capital efficient manner because they're building with small teams. I read this stat which said top quartile enterprise AI companies are now hitting $5 million in ARR within just 12 months. Now, has this changed our expectations on growth when we evaluate AI deals?
Yeah, honestly, it's too early to comment. I think that's the real answer. I can make up an answer, but I think this is the real answer. And on valuation and growth, evaluation is a supply-demand problem. Right? I think at early stage, especially where we are investing heavily right now, it purely boils down to what does the demand of that company look like and how they get priced. On the growth expectations, again, I think this goes back to my previous point on, we really need to understand which game we are in. If it's an enterprise, truly enterprise, high ACV, sticky business, it's still going to take more time. If it's a prosumer company, then the growth expectations are a lot more higher because the market pull is there. Unlike, 5-10 years back where you were still, because SaaS had almost, become more main standard and people were still trying to innovate and build businesses there. I think there was a lot more push sell that, hey, this is how we are solving your problem. This is the product that you should use, etc. Right now, the market demand and market pull is very high. Adoption still lags as compared to the innovation that's happening, but still people want to try out new things. People want to at least give it a shot. The POC is much likely to happen. Whether they pay or not is a separate question altogether. So obviously the growth expectations as compared to probably 1 million ARR Series A may not happen in the AI age. I think that the expectation is a little higher.
I mean, it ultimately boils down to both the speed of build as well as the speed of distribution. And if you look at both of them, I think both have been supercharged. You can actually build a lot faster today. And so both distribution is also a lot faster. One, obviously in the prosumer category, because all of us want to try out every new tool that has come. But at the same time, I think there's also a lot more top-down pressure in companies to actually try, hey, every board is asking, how are you using AI for efficiency, including us in our portfolio companies? I think the way I would frame it though is, like Poorvi said, adoption is still lagging, but the pull is there. If we contrast it to the cloud cycle, and if you asked, larger companies or legacy companies at that point, have you tried out this cloud tool? You'd have just gotten raised eyebrows. That's not the case in AI. Everybody knows this is existential. And I think the hype cycle is obviously at its highest. So we are seeing that pull in the market, which is what is reflecting in the speed at which companies are growing. I think valuations follow next 12-month revenue expectations and things like that in some sense. But I think there's definitely a lot higher velocity in both the build and buy.
So what are your concerns in this hype cycle?
Yeah, that's a deeper question. I think See, personally, there's been one thing that I've been really thinking about a lot. This entire labor spend, right? Like, and if you look at, and we've spoken about it, and see, as a VC, I today know that everything that was up for grabs as a software spend, now labor spend actually 5x is that almost. And you talk to any founder, you talk to any VC, they will talk about that, hey, how labor spend has actually expanded. And that's why with AI, the TAM is actually massive, even in the verticals which you thought were much smaller verticals. The question that I've been deeply struggling with is that, hey, there is a very high degree of upskilling that needs to happen. Otherwise, if most of these things, and we spoke about this customer support, we spoke about, and in India especially, BPO industry is a very, very big industry. We spoke about all these cases where there was a lot of repetitive tasks that used to be done. Those are actually the fastest that get taken away by agents and AI, right? So what really happens if people don't upskill as fast as some of these things are getting adopted is a big concern in my mind, more from a societal aspect. That, hey, we really, sometimes we all live in a LinkedIn bubble, if you think about it. Our jobs are more creative, our jobs are more thinking, etc. But there is a huge economy that has actually, especially in India, gotten built on just pure play BPO stuff. So it's a concern for me from a societal aspect. It's something that I think anybody around us who's actively managing those teams need to rethink and need to actively work on that, hey, how do we upskill people for the new kind of jobs that are getting created? So that's something that really bothers me at this point.
Very similar thoughts, and actually on the same vein, if you think about it, when the last few cycles happened in the industrial era, we had maybe 2 generations to adapt to the new technology. With computers, you had 1 generation to adapt to the new technology, and now we have 3 years. So I think the challenge is you have to teach every old dog new tricks in a record time, and that's not easy. Sure, there are much better tools out there. You can go and learn on YouTube. You can go learn courses, the online material available. You can talk to ChatGPT and learn this. But I think what will truly differentiate is people who are willing to go that extra mile and get them outside of their comfort zone. And I think that's not an easy thing to do when you consider a societal impact, like Poorvi mentioned. So how do we actually upskill, and how do we actually do this in the same record fashion that technology is changing is something that a lot of us have to deeply think about.
So on the topic of moats, talent wars are very real in AI. Startups are clamoring for great AI talent, and that is also an area where we are actively helping our founders. And I hear that the timelines to fill AI roles, be it in data science, AI, ML, AI engineers, has become considerably longer. What's the reality on ground that you're seeing?
Well, I mean, we are in the age where there's a $15 billion all talent acquisition that happened, and $100 million annual compensation offers are being given out. So I think it is real. It is real everywhere, not just here. And I think at least in the short term, talent has become a real differentiator. While it's not one of the traditional moat kind of things that you would talk about, but I think getting access to high quality talent and being able to build out product very quickly is something that a lot of our companies are struggling with. In fact, based on some of the latest data we saw, I think over the last year or so, we've received mandates. We have a talent team which is incredible, and our talent team has received mandate for almost 20 to 25 AI engineer hirings that have to be made. And we've been successfully placing a lot of them, and this spans both here as well as US. I mean, we are finding people are looking to hire wherever they can actually get this kind of talent. But I'll let Poorvi add.
No, I think it's super real, and that's obvious in some ways, the way acquisitions are happening. Why would you, acqui-hire means talent, right? At the end of the day. So it's very, very real. Also, if you think about it, there is no one single persona of an AI engineer. Today, AI engineer can come from data science. Today, AI engineer can come from traditional software engineering. AI engineer can come from product management as well. So it is a skill set that everyone's graduating to. It's not something that, hey, if you did computer science in your undergrad, you become an AI engineer. So I think that there is no one way of becoming an AI engineer, and that's why there is a dearth of finding those very relevant, highly adaptable people, because everyone's learning on the job. Nobody knows how to do it from day one, but people are learning on the job and becoming very, very fast learners.
The other thing I would add is, I often hear this complaint from people that India doesn't have real AI talent. That's something that I've often heard. I think I would differentiate this into two things. I think there is the AI researcher talent, which I think is still largely concentrated in the valley and within these very large, big tech companies, the Googles of the world, the OpenAIs of the world, etc. And then there is the AI engineer, somebody who's able to actually use and leverage these models in very creative ways. At least based on my own observations, yes, I think the AI research talent is still concentrated in the valley, but the AI engineering talent is definitely present all over the world, and I think India is catching up very quickly. So if there are founders who are actually looking for that AI engineering talent, I would definitely say, hey, look everywhere. Don't just, like, I hear this from a lot of people that, hey, I want to raise more money because I want to go and hire AI researchers or AI engineers in the valley. Unfortunately, Zuck is hiring all of them. So you're not going to get them. I think hire great AI talent, hire great product talent anywhere. And like Poorvi said, they can actually pick up the ropes.
Yeah, and the news today is that 3 OpenAI researchers have now joined Meta.
in Zurich. So clearly, Zuck is also not able to hire them in the valley.
Perfect. No, I think even internally, I think one of the key priorities for our talent team is, again, getting these really great mid-senior AI talent. And I think that's one of the areas our startups are also seeking a lot of help from us. Last question before we wrap up. Where is Elevation going to invest in 2025 in AI?
We've been investing. I think it's good that you caught us together now, because we've been very, very actively investing. Yeah, I think all the 3-4 places that we spoke about, right? I think middleware, infra remains top of mind. I think applications across verticals, prosumer, consumer remains top of mind, and we've made investments there.
Like Poorvi said, we are obviously investing aggressively in all the themes. I think the only thing I would say is, I'm the part that I can see in the foreseeable future, the amount of activity is only going to increase. So I think that is the part which has been very exciting. But I'll, take a slightly different take and say some of the things I'm very interested and excited to see developing personally. I feel I still struggle with connecting all my different apps with AI tools together. I think MCP is a great wave. I wanted to see it become much more pervasive. I'm looking forward to memory. I think there are already great green shoots of it, especially when I talk to some of the top agents. But I think there'll be a huge unlock as that becomes real. And I think the last part is I feel that there is still, some of these things still lack deep domain expertise, true multimodality. And I think looking forward a year, I'm very excited about what I'll get as a user.
Great. That's a great note to wrap this episode. Thank you. That has been great. And I'll be scheduling a sequel to this episode 3 months from today. Thanks so much for joining, Poorvi and Krishna.
Thank you.
Cool. Thank you, folks.